Hello folks, good morning, good afternoon, and good evening to all of you. Myself, Dhruv Maheshwari. Agenda of this video, a discussion about upcoming IPO of M&B Engineering Limited. So let's start. Some basic details regarding the offer. It is a mix of both fresh issue as well as offer for sale. The fresh issue is of 275 CR and offer for sale is of 375 CR. That makes the total issue size of 650 CR. The offer is opening on 30th of July and would be closing on 1st of August. The tentative date of allotment is on 4th of August and tentative date of listing is on 6th of August. The price band for which the company is going to bring this IPO is 366 to 385. So let's see further. Some basic details regarding the lot sizes. The issue is in 3 lot sizes: retail lot, SHNI lot and BHNI lot. Retail lot consists of 38 shares which amounts up to 14,630 rupee. SHNI lot consists of 532 shares which amounts up to 2,04,820 rupees. And BHNI lot consists of 2622 shares which amounts up to 10,09,470 rupee. Number of application 44,293 around application in retail lot. Number of application in SHNI lot 1582 application and number of application in BHNI lot is 3164 applications approximately. So this is the offer which has been filed with SEBI and other regulatory bodies. So let's see further. The financial performance of the company. The total income of the company is 9,968.89 million rupee, of which 9,885.54 million rupee comes from its main business operation, which is pre-engineering buildings and metal roofing. And there are some finance costs, etc., employee benefit expenses. As we can see, the finance cost has been decreased. It was 230.58 million rupee at 31st March 2024, but it has decreased to 199.58 million rupee in FY 2025. So the profit before tax is 1022, which has increased from 608, and further it was 454.84 million rupee in 2023. So we can absolutely say it is a huge profit growth in the company, as we can absolutely see this as a green flag. It's actually amazing. This shows the company is growing at a very nice pace. And yes, also the tax expense has been increased. It's very obvious that company is growing, so the tax expense will also grow. So finally, the profit after tax comes out up to 770.47 million rupee, which is also very, very nice. It's a sure green flag from my side. Some details regarding the debt over company. The total borrowing in million is 1861.33 at the end of the March 31, 2025, which was 2048.42 million rupee at 31st March 2024. So the company has reduced its debt. It's also a green flag. We can surely say the financial burden of company has decreased, but as well as the financial leverage of the company has also got a disadvantage from this side. But all in all, I would say, green flag. Net debt to EBITDA is 0.80. Debt to equity ratio is 0.33 times, which shows the company is majorly relying on the funds of equity shareholders and not on debt. So it's a very good factor, I would say. Interest coverage ratio, the company is absolutely fine in doing this. It's all in all a green flag. If we see the debt of the company, it's absolutely normal and very good. So the growth of business and industry, the company is going as well as the industry is also growing. PEB, import and export in India, is also a good segment. The company is majorly in export of its products, that is pre-engineered buildings, PEB, and also making self-supported steel roofing, as well as so all in all it's a growing market. Its demand in Southeast Asia, its demand in North America and other region is good, and it's booming as of now. And the company is assuming that its industry will grow at a moderate pace, that is 9.5 to 10.5% CAGR for the next 5 to 6 years. And as well as for self-supported steel roofing market, it's growing at a little bit lesser pace than PEB, but also it's fine as this is a growing market, majorly with a view of exports. So let's see further. These are some ratios which I have added for all of you. As you can see, the PE ratio is decreasing and EPS ratio is increasing. So this absolutely shows the green flag for the company, as the earning per share is improving and EBITDA margins are also improving. So I've summarized all this in these 6 key pointers. So let's study these. EBITDA and PAT margins are improving continuously, which shows improvements in profitability of the company. No doubt, it's very clear and obvious by looking at the financial performance of the company and these chart patterns that the company is going at a good pace. All in all, it's a green flag for us. ROE and ROCE indicate strong and rising returns on equity and capital employed. This is also a green flag. Earning per share has a fantastic growth over the last couple of years, and it has doubled. No doubt, it's not a only key factor that we should consider, but it is a factor that we should also consider at the time of decision making. PE ratio shows company is bringing that the IPO at a higher valuation, that somewhere shows it a little bit overvaluation. Although it can also be interpreted as promoters and BOD, board of directors, is very confident in the business, that is why they are charging premium. All in all, we may see it as a negative factor or a red flag, as the company is bringing at a higher valuation as compared to its listed peers. We'll study further the listed peers and all. Return on equity is absolutely very good in M&B as compared to Pennar and Bansal Roofing. These are the two listed peers of the company. No doubt, company is growing at a good pace than these two. In case of PE, the company is offering a high PE. That means company is charging premium, and earning per share of the M&B Engineering Limited is fantastic. It's absolutely nice. It is for sure a green flag. And estimated market share in India of this industry. So yes, it's the estimated market share in Indian PEB industry, that is pre-engineered building industry. So as you can see, the major portion of this is holded by Tata BlueScope, Everest Industries, Interarc. These three are unlisted companies. So these are in market, but they are unlisted. So if we actually compare the company, if we actually want to compare M&B Engineering Limited, we have to compare with these two, Jindal Build Systems and Pennar Industries. Pennar Industries hold 15%, whereas M&B Engineering hold only 2%. This is what we can say. The company is growing at a good pace, and company has more potential to grow further, as its peers are already at a very high valuation, at a very good market cap. The company is M&B Engineering Limited has a good opportunity to grow further. Let's see its SWOT analysis. M&B Engineering Limited SWOT analysis. SWOT analysis means strength, weakness, opportunity, and threats. So the strength of the company is its high ROE and its export vision. I've already said to you that company is engaged in export and company's major revenue comes from export only. Its weaknesses, client dependency, as I've already said, it's this type of business is mainly dependent on clients and contractors, etc. And promoter overlap, yes, this is also a weakness. Opportunity of the company is PEB sector growth. The PEB sector is actually growing at a very fantastic pace in Southeast Asia and in North American region. The threats, cyclical demand or manufacturing delays. All in all, it was I think, as per me, and it is a green flag for sure. But it's not a buy or sell recommendation at all. I've already told you many a times. I'm here just for doing analysis for you all. So let's keep this as only for educational purpose and not for buy or sell recommendation from this side. So thank you. All in all, I would say it was a green flag. You may invest, but invest at your own risk. Thank you. Like, share, and subscribe.